This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe Rabil. I'm going to give you an update on the S&P and the QQQ today. I also want to talk about specific trade setup that took place this week and the reasons for why I did the trade, which was a counter trend trade. And I think, it was based on, and it was on the S&P. I did puts on the S&P and just want to make sure you understand why, what I was seeing, and, what the resolution of that is going to be. We'll find out. But let's go ahead and get into the market conditions to start. And so I've got this chart up with the conditions over on the left. One of the things of note when we look at the trend and momentum conditions is that the hourly has turned negative, and the momentum for both the daily and the hourly I put in the negative camp, and I'm going to show you why I have that there. Volatility is still, if we go over here to this chart, we still have a declining ATR, average true range line, below a flat moving average. So that's considered neutral. If this stays down for any length of time and this rolls over, then this is going to turn the volatility portion of this indicator back to the positive side. So, that's all about, are we getting orderly pullbacks, light volume consolidation type patterns versus big volume and volatile moves like this that creates the volatility and changes the average true range. The lower the volatility, the higher the more positive the situation. So, and I would probably make it more like the risk. The risk levels are elevated the more when volatility is increasing. And then let's look at this overbought, oversold has dropped down to 67. We don't have any kind of a official sell signal yet. So I do think there is a little bit of a divergence built up in here, but not of the type that is going to cause any kind of a major drop. And I'll show you why when we get into the trend and momentum in a minute. Sentiment bumped up a little bit, not a big change there. As I said, that is more of a backdrop indicator to me, meaning if the market were to roll over here and we're in the 40s, that would be somewhat concerning because we want to drop that number down, meaning when the sentiment is more bullish, then there's more risk to the downside. But we need to see price and trend trigger that signal. It's not the type of thing where I'm going to just sell just because the sentiment is too bullish, okay? Let's go ahead and get into the chart of the S&P now, and not much change in the monthly at all. We're still a little stretched away. Weekly is in good shape. I would really love to see this pull back closer to the 18-week. I want to switch this to the S&P chart, and my reason for doing that, I know I look at the QQQ, but my S&P, my spider chart, SPY, gets a lot of bad quotes, and when you get bad quotes, it really screws around with the ADX. So I don't, especially in the smaller time frame. So I like to use this S&P chart. It has a lot less errors in the price action. So I just want to make sure you understand that. I'm not doing the spider on purpose. I'm literally skipping the spider on purpose because I know that some of the indicators are going to be a little off. But if we look at this on a S&P, both the MACD and the ADX still look in good shape. I'm not seeing any real signs of danger right now. I'd love to see this pull back towards this 3,700 area because I do think that would probably represent another buying opportunity. But it just doesn't, I don't know. Every time we're dropping down, and we can see this pretty clearly on the daily chart, every single time this drops down, at least the last couple of days, there's been buyers at the end of the day to bring it back. So, looking for one of those wide range bars on a daily chart that maybe has a little follow through the next day. And then we could start to see the potential drop down towards the 18-week line. Remember, we start with the hourly, and when we break the hourly 18, our risk is down to the daily 18. And then we look for a break of the daily 18 to look for a risk down to the weekly 18. So the way I'm not trying to make a big call. I don't think you need to make a big call in the market. You're trying to evaluate what each time frame is telling you, and then take advantage of those areas in between. And so if we break this daily line, which is right around 3860, and we roll that over, then we have room down to 3600, 3700, something like that. So that's how I want you to start thinking about this. One of the more important things that I wanted to talk about today was momentum, because I have been alluding to the fact that the daily chart has not had any good momentum, and ADX has not been confirming. We can see that pretty clearly in this chart, where the blue line has actually, in recent movement, has actually dropped down and gotten even worse, despite the fact that the market has moved higher. And so when I see this line dropping, that's one thing that's, bothersome. But it doesn't cause me to do anything unless I see something happening on the hourly. So let's take a closer look at the hourly chart. And what happened here was, and actually, I just want to point this out. So right in that zone right there, my partner and I bought puts on the SPY. And our reasoning was, we started out with the daily chart and said, okay, I know we're making this new high and ADX is dropping, but now look at the hourly chart. We made a new high right up in here. And not only did MACD make a lower high, but one of the signals that I have talked about, and if you go back through any of my ADX videos, this is the major ADX divergence pattern that I look for, where ADX can't even make it up to 25 when price makes a new high. So you've been trending to the upside, and then you make a whole new high right here, and ADX can't confirm. So while this is up here, and you got to remember, when we buy puts, we're hedging our portfolio. We're not selling our stocks. We're just hedging against a correction. And really at this point, we're only hedging for a move back towards the 18 and the 40 on the daily chart. I'm not necessarily calling for a big crash down to 35, 3600 or something like that in a short period of time. But we want to protect against this little drop here in the short term. And so what's taken place recently now, we've gotten the red DI to cross over a couple of times. It's trying to hold now. We'll see how this is going to resolve itself, because we're right at the 18 and the 40. If this is going to resolve itself to go back down and test the 18-day line, we're going to fail starting tomorrow morning. We should see follow through. I think if we end up pushing up through this 39.25 area, something like that, then we're probably just going to be sloppy sideways. And, this probably does not resolve itself to the downside, at least for now. But I do, again, when I'm looking to hedge, I'm sort of looking at it like, I've got a week or two of risk for the market to pull back. And I kind of want to see what kind of sellers show up. And I do really inexpensive option trades. It's not like we spend a whole lot of money on it, but it does protect the downside risk. So that's the mentality there. Let's go ahead and look at the QQQ. Want to make sure I cover this real quickly. This was actually, it's sort of a similar trade to the downside when you look at the hourly chart. But one thing I wanted to point out is that this has a little bit more pullback risk to it, because it's a little bit farther away from the weekly line. So we really could have done this same trade on the daily and the hourly on the QQQ. Had the same ADX problem where ADX was sort of dropping down. It just wasn't quite as drastic. But same idea that you're losing momentum, and it's getting a little bit more pronounced, but it was heavily pronounced when you look at the hourly chart, because when this went to a new high, ADX only got up to 13. So that's a huge drop off. And it actually had been a really good trade to the downside. If we would have done this at the same point, it would actually have been a more profitable trade. But in this situation, we ended up doing the spider just based on all the evidence. But we're still at a very critical point for the QQQ, because we're rallied back up to the 18 and the 40. I think if we're going to continue down and go and test that 18-day line between the 18 and the 40, I think it should get going pretty quick. I would say sometime on Friday, we should see that take place. So anyway, that's the update for the week. Please hit that like button and we'll talk to you soon.